All right, so Rishi Gupta, I beg your pardon, not Rishi Sharma, MD or CEO of Fino Payment Bank is now joining us to talk more about number. Rishi, afternoon, thank you so much for your time. Your numbers have come in pretty good, 25% revenue growth, slightly higher than what you had guided for, almost 5% higher. So I want to understand first that this outperformance of 5% is a one-off, or in general it is trending higher than what you had, kind of readied the street for in terms of performance.
So, good afternoon to you and to your viewers. See, when we put together our plan as of last year, we were looking at 20% growth, which was largely coming from the physical ecosystem which we have built over the last so many years. Fortunately for us is that we started the digital journey about 2 years back, and we are seeing a positive thrust coming from the digital ecosystem which we have built. The B2B digital ecosystem has grown substantially. If I look at it, has grown nearly 80% over the last quarter. And we expect that the growth on the digital side will be much higher than the normal physical growth which we are seeing in other channels. So on account of the growth on the digital, we expect that the earnings should be about 25% plus for FY25. So it's not a one-off item for the quarter one. We expect the momentum to continue on the digital side. Also, the fact that we are building a completely new technology stack, which will host our digital ecosystem also. So on basis of that, we'll be able to offer some new products coming up in quarter three, quarter four, and in the next year. So we expect the momentum on the digital to continue. We expect the digital to also contribute higher than 15% as we go forward in the new quarters to come.
So 25% plus growth, new launches lined up of the digital products in Q3, and of course overall contribution expected to go up. Hi Rishi, this is Anish also joining in the conversation. I was looking at your net revenue margin and that seems to have slipped a bit. It's now at 31% towards the lower end of your range of 31 to 33%. Is this a bit of a blip, or do you expect to stay around the current level for the rest of the year?
So, there is no blip in terms of the margin per se. It's more coming because the product mix has changed. Our digital revenue has contributed more in terms of percentage of revenue. Their margins are much lower than the physical transaction and the CASA business which we do. But it is a high growth business, so to say. So because of the change in the product mix, the margins have declined by about 1% or so. We expect that the margin to be range bound around that level as we go forward in the next 3-4 quarters. We expect that the digital ecosystem pricing also will set at at relatively the same level, or may go a little higher as we go in the next quarters, so to say. But you are right in terms of the margins will be range bound around this level, largely because of the change in the product mix, which has drastically changed if you look at in this quarter.
Right now, Rishi, what is happening is that the biggest issue to grapple with for the industry is deposits. And you have managed to improve your franchisee as far as your liabilities are concerned. How are you managing to do it, and what's the visibility? Do you think you'll be comfortable positioned to keep on adding good deposits going forward, sir?
So largely, if you look at our customer segments are the lower bottom of the pyramid, not the top pyramid or the bottom of the pyramid. So these are people who keep money into bank account for transactional purposes. So we have seen that people who keep money in the UPI account have higher balances. And as they get comfortable with the bank on transactions, they keep on improving or increasing their balances. On top of it, because we add about 30 to 35 lakh customers every year, we expect the momentum of new addition to increase our deposit base as such. So compared to the bigger banks where people keep lazy money, R is more of a transactional money which is being kept, and we keep on seeing changes in that. So we don't expect that there will be a drop in terms of the growth on the liability side. Yeah, because of the base effect, the percentage may be a little lower compared to 60-70% which we had in the previous years. But we expect around 35 to 40% growth in this financial year over the last financial year.
Interesting. So you're expecting deposit growth to stay around 35 to 40%. It's not the lazy money that you have. It's, of course, those transaction-based money. But I understand, Rishi, that in the month of January, you had applied for that small finance banking license. Any update on that? Have you heard anything from RBI? Is it stuck somewhere, or are you expecting it soon?
So two things on that. One is from our internal preparation point of view. As you know, we are building up a completely new technology stack, which will also have a lot of digital play in it. So that is going on schedule. We expect that to complete by end of this financial year. So that is something which will also help us getting to the SFB piece. Secondly, as you know, as we just discussed on the liability side, we continue to push on that. Thirdly, on our advances also, we are doing some pilots with some other NBFCs to understand how the entire lending portfolio will bring it. As far as the regulator and views, there's nothing which we know is stuck in RBI as such. I think it's a process, and the process will take its own time. We are waiting to hear from RBI in terms of where the process is right now, as far as our application is concerned.
Rishi, let's scratch that point of preparation a little more. What exactly are you devoting all the efforts right now in building your digital stack? And I mean, you must be back calculating it by when you actually get a nod. Till that time, this is the kind of preparation we should be done with so that we don't waste time in rolling it out or expanding. So that way, I want to understand what exactly is taking your mind share. And also, the second part is once the entity transforms into a SFB, what exactly are the material changes that's happening on revenue streams, on generally levers of the business growth?
On the technology part, see, we had our own outsourced technology partner on the core banking platform, and the front end was largely developed with in-house in the company. So we are trying to break this entire core banking platform between hollow the core as well as the core part of the core banking platform. So all the hollow the core activities are now moving out of the core banking platform. Over and above that, we are also moving to a new vendor, which is Finacle, and we are moving to Infosys on our core platforms as such. So both the core is going to get lighter, a new vendor is coming in, and new developments on the entire ecosystem, which will facilitate more transactional business, more digital business, so to come. So this we started about 15 months back, and about 50-60% of that is already completed. We expect that to complete by end of this year, which will help us to build the entire SFB on top of it, which will mean that we just need to add the lending layer to our existing core banking and the hollow the core layer which we have built. So that's the first part. The second part is that when we look at SFB, we have been a payments bank for the last 5-7 years, a BC before that. So we understand the ground, we understand the customer needs. In fact, there's a lot of demand from the customers also on the advances, and we see that the merchant ecosystem has also become quite robust. There is a lot of demand from the merchant ecosystem as well as the customer ecosystem. So Fino already has 17-18 lakh merchants. We expect that to grow by about 2.5 lakhs every year. About 30-35 lakhs customers will get added onto our CASA account also. So 1.2 crore customers we have. So that itself becomes a important base, so to say, for us when we go into from a payments bank to an SFB. On a payments bank, the way we look at SFB is a payments bank plus model. The first plus is coming largely around liabilities and some transactional businesses, which we can't do. You know that we have a limit constraint of 2 lakh of rupees. So a lot of money which we have extra, we park it with some other bank. So that itself can give us a big substantial jump as we move into SFB. Secondly, the lending itself, right now our NIM is about 4.5%. Our cost of fund is about 2.5%. We invest in GSEC about 7%. With lending coming in, we can invest that money at a higher rate or put that money under the lending portfolio. And we expect a NIM of about 8 to 10% in that scenario. So the doubling of NIM will happen once we move into from a payments bank to an SFB. The broad strategy around SFB is around the DDD strategy, which we have already spoken in the past, which talks about the entire distribution layer which we have, the data of our customers and merchants, and the digital ecosystem which we built in. Fino is committed to build up a good technology and a digital stack, and that's the big investment which we keep on doing every year. And that has shown some good results as we have spoken in the past. And we expect that as we move into an SFB, the entire technology and the ecosystem which we have built around our customers, merchants, will help us to become a very differentiated SFB, so to say.
Okay, Rishi, on that note, we let you go. Appreciate you making time and speaking with us, and hopefully next time we'll see you in the studios, because you live very close to our studios, so next time maybe we should invite you here.
Definitely. Thank you and all the best. Thank you.
Thanks so much for that. A quick